Okay. After completing the general topic, next topic is ledger. Okay. So what is the meaning of ledger? Okay. What are the advantages of ledger? Then how is posting done in ledger accounting? Okay. So after writing the transactions in journal, next step is what? We have to prepare the ac- accounts relating to the transactions. Okay. So this ledger, so under this, whenever we find out the ledger account, what we find out? We find the closing balances. Okay, how much is the balance carry forward to the next. Okay, now see here, first write down this meaning of this ledger. Ledger is a book. Ledger is a book where the journalized transactions, where the journalized transactions journalized transactions are being classified. So ledger is a set of accounts. Ledger is a set of accounts and includes all the accounts of includes all the accounts of business, all the accounts of business, that is personal, personal, nominal, okay, personal, nominal, or real accounts will be there now. Okay, so that ledger is a book. So where journalized transactions are being classified. So this ledger is a set of accounts. So how many types of accounts will be there? Here we are two types of accounts now. What's that? One is personal account and second one is impersonal account. So under that personal account, we prepare the accounts relating to the person, and and under the impersonal accounts, again we have two types of accounts will be there. One is real account and second one is nominal account. So under this real account, we prepare the accounts based on the assets. Under this nominal account, we prepare the accounts on the basis of expenses, losses, incomes, and gains. Okay, so this ledger is also known as a principal book. Okay, ledger. So journal is what? Journal is a book of prime entry, original entry na. So this ledger is a principal book. Ledger is a principal book. So under this principal book, which provides, okay, under this principal book, which provides the complete information about various transactions relating to all parties and all items of the assets, liabilities, incomes, and expenses. Okay, so this ledger is a permanent summary of all accounts, not only one account. So it recorded this all types of accounts. That all types of accounts is personal accounts, nominal accounts, and the real accounts. Okay, so in this book, we open separate accounts for all transactions relating to a particular item as recorded. Okay, remember here. So in this ledger book, we open a separate account for all transactions relating to a particular item is recorded. Suppose see here, on this date, okay, so today this is first January. On that first January, so purchases, okay, purchases goods rupees 20,000. On 2nd January, purchases machinery, okay, purchases machinery is 10,000. Next 5th January, purchases furniture, and 7th January, purchase buildings, okay, purchase building, some amount of rupees is there. Okay, so on this, for each transaction we have two entries will be there now. One is debit and second one is credit, so two aspects now. So for that, first entry is purchases account data to cash account. Next entry is what, purchased machinery. Under that, purchases account in the form of cash, purchases account data to cash account, purchased furniture. So like this, on this different purchases are there na. So for we have to open separate account for purchases transactions relating to a particular item. For this purchases is particular item na. For this we prepare one ledger account. Okay, now see the what is the format of this ledger account is. See here, don't confusing, it is easily understandable while doing the problem. Okay, now draw the format of this ledger account is. Here name of the account, so on that heading is name of the account, like purchase account, machinery account, buildings account, sales account, cash account. Okay, and after this, so this ledger contains 8 columns. Okay, so that ledger account will contain 8 columns. So it is in the form of an a T shape. Okay, remember that account is in the form of an a T shape. Left hand side is known as a debit side and the right hand side is known as the credit side. Okay, got it? Generally, account is in the form of an a T shape. The left hand side is known as is debit side and the right hand side is known as a credit side. So after that, so the left hand side is will contain 4 columns, that is date, date, particulars, LF number, amount. Same as the right side also. Date, particulars, JF. Okay, so this is a form of the account. So that first column is date, particulars. So in journal we wrote a LF number. Okay, in journal we have to write the page numbers of ledger accounts where we have to prepare that ledger account. In ledger account we write the JF. JF means what? Journal folio. In which page you recorded the transaction. In which page you have to write the transaction. So that is JF. JF means journal folio number. Next is amount. Same as a right side also. Date, date, particulars, JF, amount. Okay. See here. So there are several rules and principles should be kept while the posting. So what's that? An account has two sides now, so generally it is in the form of an a T shape. So on the debit side is marked as an a, you have to write definitely here is debit, and right side is the credit. Next is name of the account is mentioned in the top of the top in the center of the account. Okay, next is all postings on debit side starts with 2. Okay, remember that all postings, what are the postings are there that will appear on the debit side, you have to starts with 2. You will write this 2nd January, you have to starts with 2, like 2 missionary. Just this is an example only. Next is 2 furniture. Okay, like this you have to write what are the postings are appear on the debit side, you have to starts with 2. And what are, and any postings are appear on this credit side, you have to starts with buy. Okay, you have to starts with buy. Okay, like buy a account, buy any, buy account, or buy a Mahesh account. Okay, like that. Or else any transactions or any postings are there that appear on the credit side, you have to start with buy. Okay, so that first important thing is what under this ledger account, you have to write first the name of the which account we have to prepare in this ledger. Okay, after that second one is you have to draw this pro forma. After writing, you have to write definitely debit and credit. After that, any transactions are posting into this ledger account na, definitely you have to write any posting is there in debit side, you have to start with 2, and this any is appear on this credit side, you have to start with buy. Okay, after that, so under this, the word account is not written after the name of the any personal account. Okay, next is if an account is debit, so then how to post in this this account. See here, if an account is debited in journal, then it is posting is made on the debit side of this account. And if an account is credited in journal, then the posting is made on the credit side of the account. Now see here, one entry is, okay, bought goods from Srinath. Okay, bought goods from Srinath on credit basis. Generally, what is the entry for that bought goods from Srinath means? Bought goods means purchased goods. Okay, so for that entry is what? Purchases account data to Srinath account. Purchases account data to Srinath account rupees 50,000 and rupees 50,000 is there. Now see here, so this entry is how to post in ledger account. Suppose the name of the account is, for this example is purchases account. Okay, this is a purchases account. So see that what is the entry? Purchases account debtor. So debtor means it is a debit now. So if any account is debited in journal, then posting is made on the debit side of the account. So this is debit side will be there now. Which account is this? Purchases account. So on this purchases account, it should be right on the debit side. What? On the opposite you have to write. So to Srinath account. Here you did not write purchases. Why? Because it is the account of purchases account. So in this purchases account, why we have to wrote that purchases? No. Okay, you did not write here purchases. On the opposite party, you have to write here. Okay, got it? If any account is debited in journal, then posting is made on the debit side of the account. Like see here, and So not this is an a purchase account. Let's see another example is it is an a Srinath account. Srinath account. So if any account is credited in journal, then you have to post into the credit side of the account. So on that credit side of the account, by is it writing any Srinath account? No. Why? Because already it is a account of Srinath account. Then this person is not again recorded. For why? For which is recorded by purchases account. Okay, so that 50,000. Okay, remember here any starts with it is Srinath account now. So here Srinath account is credit side. So on the account of credit side you have to write the opposite party. What is it? Purchases. Okay, by purchases. So after posting all the items, then last is we have to find out the closing balances. Why? Because find out this closing balances in this ledger accounts we did not tally the both debit and credit side is name same. Okay, what we we find out that both debit and credit should be same. Suppose here on that credit side is how much is the amount is there, 50,000 amount is there, but total of the debit side is only 30,000 is it. Is it tally the ledger account? No, we have to tally the ledger account by writing the closing balances. Okay, so that closing balance is here right like this is balance carried down. Okay, to balance carried on. So how much is the difference is they're getting here 50,000 is there, here 30,000 is there. How much is the difference is a 20,000 is the difference balances. Okay, this 20,000 is a closing balances. Okay, to balance carried down. Okay, so in this main ledger account, for what purpose we have to prepare this account is to find out this closing balances of the accounts. So this balance is where it is useful. This balance is useful in preparing the trial balance. Okay, this balance is this which balances, this closing balances. Closing balances or carried down balances is useful in preparing the trial balances. Okay, got it? Okay, so this is a pro forma. Okay, write down in your books. Okay, what is the meaning of ledger? Okay, what is a pro forma of this account? Okay, you know now got it how to post into the accounts. Afterwards I will pro- do the problem, then that time also I will explain. Now see the what are the advantages of ledger. Okay, what are the advantages of ledger? Okay, advantages of ledger. So see here that what are the advantages are there. First advantages is knowledge of business results, knowledge of business results, knowledge of business results. Next is knowledge of incomes and expenses, knowledge of incomes and expenses, knowledge of incomes and expenses. Next is helpful in helpful in preparing helpful in preparing trial balance, helpful in preparing trial balance. Next is helpful in preparing final accounts, preparing final accounts, helpful in preparing final accounts. Next is overcoming the overcoming the limitations of journal, limitations of journal. Okay, so these are the advantages of journal. Now we will discuss about this briefly about these points. So that first one is what? Knowledge of business results. So before going to this, write down the meaning of posting. Write down the meaning of posting. Afterwards I will explain this advantages of ledger. Okay, in ledger main is what posting is in. So the process of the process of transferring the process of transferring the debit debit and credit items, debit and credit items from the journal to from the journal to the ledger in their respective accounts, in their respective accounts is known as posting. Okay, posting means what? So what are the writing transactions in journal, so that all the transactions are transferred from the journal to the ledger to their respective accounts is known as this posting. Okay, posting must be done before the preparation of final accounts, so that accounts which are active in nature must be updated on a timely basis. Okay, so that preparing that accounts on the time basis. Okay, now coming to here, knowledge of business results. Okay, knowledge of business results means what? So under that business several transactions will be there. So on that one day is purchases, sales, any expenses, any losses, incomes will be there now. So that with the help of ledger, the important information relating to this business can be easily obtained, as all the business transactions that are the transactions are relating to an item are recorded in the form of an a separate accounts in the ledger. Okay, got it. So on that business transactions, what are the transactions are relating to an item are recorded in the form of an a separate account. So in that ledger account, we prepared the separate accounts for all the transactions. So this in such a way as their effects on these assets, liabilities and any capitals can be easily understood. So this is the knowledge of business results. Next is knowledge of incomes and expenses. Okay, next is knowledge of incomes and expenses. See here, a separate account is opened for each item of income and expenses. Okay, incomes means any commission account, okay, any interest received account. Expenses means what, expenses are rent paid, paid electricity bill, so these are several expenses will be there now. So for all that incomes and expenses, we open a separate account for in the ledger. So thus it enables to understand that what are the sources of income, where the amount is spent. Okay, so we get, while we prepare this income account, so under this income account, where the amount is getting that income. Suppose whenever we prepare the expenses account, where the amount is spent and which date this amount is spent, so all this preparing in this ledger account na. So this is useful at that time. Okay, next is helpful in preparing trial balance. Okay, so in that before I told, so this what are the closing balances means, that is balance carried down will be getting now. So that balance carried down will be useful in preparing the trial balance. Okay, this ledger is also helpful in the preparation of trial balance. So without preparing the ledger, trial balance cannot be made. Why? Because whenever we preparing the trial balance, by taking the balances of this ledger account carried on balances. So without ledger, without balances carried on amounts is there, then how to prepare the trial balance? So it is not possible to prepare the balance without ledger. So that's why ledger is compulsory, we prepare the separate accounts. Okay, it is helpful in preparing the trial balance. Next is helpful in preparing final accounts. Next is helpful in preparing trial balance, sorry, helpful in preparing the final account. So under these final accounts, so this ledger is mandatory for the businessman to prepare the final accounts. So it is compulsory now for every businessman, for every business, at the end compulsory they prepare final accounts. So at that time this ledger is mandatory. So this ledger helps in preparing the final accounts as a total or balances of accounts, that accounts are appear in trading account, profit and loss account and balance sheet. So that in this trading account we find out the gross profit. So at that gross profit, what are what items are appearing in this trading account generally, like purchases, sales, opening stock or any closing stock or any freight. Okay, that is relating directly to the business. Under this profit and loss account, generally we recorded the expenses, losses, incomes, gains na, like stationery account, commission account, discount account, any depreciations account, rent, electricity bill, stationery, so that all that appear in this final account. So in this final accounts, what we prepare, we prepare trading account. In trading account we find out the gross profit, and we prepare profit and loss account. Under this profit and loss account we find out the net profit, and this at the end balance sheet. Under this balance sheet mainly we get this assets and liabilities should be equal. So this is a ledger is helpful in preparing final accounts. Next is overcoming the limitations of journal. Okay, next is overcoming the limitations of journal. Okay, this so ledger fulfills all those objects which like in journal. Okay, in journal does not provide complete information of all the transactions relating to an account. That account is in classified and summarized form, but the ledger provides it. In journal, what we own, we write only the entries, means which is debit, which is credit only, right? But in the ledger we find out the balances, we post that entries. Okay, so this ledger is helpful in trial balance final accounts. Okay, so that's why ledger will give a complete information about this. Okay, these are the advantages of ledger. Next is, what are the differences between journal and ledger? Journal, what are the differences between journal and ledger? See, there is some differences are there. So first is, what is the meaning, what is the meaning of journal and what is the meaning of ledger? So journal is a primary book wherein all the business transactions are recorded on a daily basis in a systematic manner. Okay, ledger is what? Ledger is a book where the journalized transactions are being classified. After completing writing the transactions in journal, next is we classified. Okay. Next is type of book. Journal is which type of book? Journal is a primary book. Okay. So journal is a book of primary record. Ledger is a book of final entry. Ledger is a book of final entry. Then next is what? Process. Okay, what is the process under the journal? So this process of recording transactions in journal is called as an a journalizing. Okay, so that what are the transactions are there, so that are recorded in the journal is called as an a journalizing. In ledger, what is the process? What is the process? So that the process of recording transactions in a ledger is called as a posting. Okay, next is nature. In journal we find out any balances. In journal we can't find any balances in journal, but in ledger main purpose is what? For preparing that ledger mainly is to prepare the balances. Okay, so in journal is not balanced except for the cash book, but in ledger every account in the ledger is balanced. Okay, every account in the ledger is balanced. Next is narration. In which narration is important? In ledger narration is important? No. In ledger any writing narration? No. Where it will be useful, this narration? In journal. Why? Because of it gives the complete information about the transaction. So in journal narration is required for each entry. For every entry definitely you have to write the narration. Okay, in journal narration is required for each entry, but the ledger narration is not required. Next is folio. Folio means what? Page numbers. Okay, like in journal it includes the journal folio is writing. In journal we write transactions, that page only we have to write that? No, in journal we have to write the page numbers of a ledger where you have to prepare this ledger account. So at that time it is an useful. Okay, folio in journal it includes the ledger folio. In ledger accounts it includes the Journal folio. Opposite. In journal we write the ledger page numbers. In ledger account we write the journal page numbers. Next is preparation of final accounts. Next next is preparation of final accounts. Okay, so in journal it does not facilitate the preparation of this final accounts because it gives just information about the transaction. Okay, on this date this much is a purchases amount, so that for purchases this is the entry, for sales this is the entry. But in ledger it serves as a basis for the preparation of a final accounts. Next is recording transactions. Next is recording transactions. So in journal the transactions debit and credit amount are recorded in two adjacent columns. Okay, so we have to write now, so debit amount credit amount in a adjacent column. So in the transaction both we have to write the amounts on the debit side and the credit side. Okay, so in that recording the transactions in journal, the amount of debit and credit are recorded in two adjacent columns, but in ledger the transactions debit and credit amounts are recorded in two different sides of two different columns, because in one account we did not recorded that one transactions completely, because we have to write the two names now. Suppose purchases account data to cash account, so at that time how many accounts you are prepared? You prepared two accounts. What are that is? One is purchases account and second one is cash account. Two different accounts are prepared. So under the two different accounts we have to write the two different sides of the amount in two different accounts. Like under the purchases amount you have to write the credit side, sorry, in purchases account is debited now. Whenever you have to prepare that purchases account you have to write the debit side to cash account. Whenever you have to prepare the cash account is credit side now. On that cash account credit side you have to write the by purchases. So here two different columns, two different accounts. Okay, in ledger the transactions debit and credit amounts are recorded in two different sides of the two different accounts. Next is appearances. Appearances means in journal includes one debit column and one credit column. Okay, is it compulsory now? So without debit, without credit there is no entry. Okay, in journal includes one debit column and one credit column, and in ledger includes two sides. What are the two sides? One is left hand side is known as is debit side and the right hand side is known as a credit side. Next is importance. Next is importance of journal is computerization of accounting eliminates the importance of journal for recording the routine transactions. Okay, so in any manual accounting it is a useful. Okay, in computerization automatically that will find out the entries debit credit. In ledger, importance of ledger is computerization of accounts cannot eliminate the importance of ledger. So ledger cannot be avoided as it is must. Okay, definitely we will prepare the ledger accounts. Okay, without ledger preparing we can't prepare the final accounts. Okay, so these are the some differences between journal and ledger. So from the next classes we will start the problem. Okay, theory part is completed up to the ledger. Okay, After that, from next classes, one problem is given. So for that problem we have to prepare the journal and we have to prepare the ledger. In journal we have to write the transactions of the 10. Okay, we have to write the entries. After that, what are the entries are recorded in the journal? For that we have to prepare the ledger accounts. Okay, this is our today's class.